Hey everyone, Coach Investor back to our earnings video for you today. So Alibaba reported earnings, again, a double beat. We are used to, in the last couple of quarters, to see great numbers from Alibaba compared to what we've seen 1 year ago. I mean, besides the fact that this is a Chinese company and so the market was punishing this because of the whole geopolitical tensions there, the business itself was also not doing great. The Chinese economy was not doing great at all and currently isn't doing great as well. And so you saw the stock get hit a bit more. There is increased competition in the Chinese market, in the Asian market as well, and that was reflected in Alibaba's financials. Now, in the last couple of quarters, they did not only accelerate, let's say, revenue a little bit, but they definitely did a lot of work when it comes to the bottom line, when it comes to the profitability of the business, especially if you look at free cash flow generated, billions and billions each and every quarter, which allows the company to buy back their shares. Now, of course, we also have the spin-offs of its businesses. We're going to go over this again in this video, just a tiny little reminder for those that forgot about that. But first, a couple of comments here. So Alibaba delivered a solid quarter as we continue to execute on our reorganization, which is beginning to unleash new energy across our businesses. Through this self-driven transformation, we aim to catalyze innovation, promote vitality in our organization, and enable businesses to focus on long-term growth. We look forward to positive impact on our business, including strengthening competitiveness, sustainable growth, and shareholder value creation. Due to this strong business momentum and our focus on operating efficiency across businesses, we achieved robust financial performance in the past quarter. Revenue and adjusted EBITDA increased 14% and 32% year over year respectively due to improvements across all business segments. We repurchased $3.1 billion worth of ADS this quarter, which is supported by our continuous generation of strong free cash flow. Our strong free cash flow and balance sheet puts us in an excellent position to strengthen our competitiveness and capture new opportunities. Of course, if the stock continues to be undervalued, then they just acquire more and more shares, take more shares off the market, which is very, very good for shareholders, despite the fact that we've seen a huge underperformance from the stock. When eventually this will move on the upside, you will get rewarded much more. Now, with regards with the spin-offs, so they have implemented a new organizational and governance structure under which we are a holding company of 6 major business groups and various other businesses, with each business operating with a high degree of independence. And so the 6 major groups are Taobao and Tmall, which includes Taobao, Tmall, Xianzhu, 1688.com and other businesses, Alibaba International Digital Commerce Group, which includes Lazada, AliExpress, Trendyol, Alibaba.com and other businesses, Local Services Group, China Smart Logistics Network, the Cloud Intelligence Group, and the last one, Digital Media and Entertainment Group. And so, let's have a look at how each segment has performed this quarter. Taobao and Tmall Group is up 12% year over year. Alibaba International is up 41% year over year, driven by strong growth from Lazada, by the way. Local Services Group up 30%. China Logistics One, 34% growth. Cloud Intelligence up just 4%, but we are going to see some improvements on the profitability side there. Digital Media Entertainment Group, that's up 36%. So all in all, they increased revenue by 14% year over year. Then when it comes to diluted earnings per share, 56% growth year over year, and the same for ADS. With regards to adjusted EBITDA, 32% growth year over year, and then their non-GAAP diluted earnings per share and ADS increased 48% year over year. And so we can see this reflected here in the income from operations, strong free cash flow, strong net income as well. So income from operation increased 70% year over year, net income increased 63% year over year, and free cash flow for the quarter was $5.39 billion, which will allow them to keep on buying back shares if the market keeps on punishing this company. Not only can they buy shares, they can maybe issue a special dividend from time to time if they want to, reinvest all the money in some new ventures, who knows? But having such a good amount of free cash flow generated each and every quarter is certainly a big positive. And so let's look at each and every segment and how it improved on an adjusted EBITDA basis. So Taobao and Tmall Group, we increased adjusted EBITDA by 9% year over year. When it comes to Alibaba International Digital Commerce, adjusted EBITDA still negative $420 million. But if you look down below, it is a huge improvement year over year by 70%. Local Services Group increased 30%, still negative as well. China logistics one is positive compared to last year, a negative, a loss here of 185 million. The cloud one, so last time we were at 188 million. This time we increased it by 106%. So while revenue for the cloud services is not increasing as much as they would have expected to, at least they're now generating a bit more adjusted EBITDA. Then with regards to digital media and entertainment group, 63 million compared to a loss of 907 million. So major improvements there. And so total segments increased 24%. Then a couple of extra things here. So for the quarter ending, Taobao app group average daily active users by 6.5% year over year, resulting from effective user acquisition programs and improving retention of Taobao app users during the quarter. With regards to the international side, so Lazada recorded double-digit order growth year over year during the quarter. As a result of improving monetization and operating efficiency, Lazada's unit economics continues to improve compared to the same period last year. And this is reflected obviously in the margins, huge improvements there. Then with regards to the cloud intelligence groups, of course, they're talking here about AI, generative AI, the new features that they launch, etc., etc. They say here Model Scope, our open source platform, providing a large number of machine learning and deep learning models, tools, and services, hosted over 1,000 AI models, and receive an aggregate of 45 million downloads as of July 2023. The platform is one of China's leading online community for open source model resources and allows developers to train and experiment with the models by leveraging Alibaba's cloud AI computing capabilities. Of course, with the whole AI, generative AI hype right now, this should generate some momentum for them. And so if we look at the graph, this was the last earnings report. So I said there was a 31% upside. We're now halfway there, depending on how the market will react to the CPI report. But currently, we are sitting above the 200, the 50, and the 20-day moving average. RSI is still pretty neutral. MACD is still bullish. In my opinion, this is a good report. The company is going into the right direction. The stock itself has gone into a good direction since the $80 mark back in May. And so the $100 mark remains a psychological barrier, let's call it. If we can go and finish the week, let's say, above that $100 mark, I think we could start some positive momentum. Of course, do share your thoughts down in the comments below. Do you still own Alibaba? Have you sold? Leave it down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.